Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday and it's December 28th. So far, another slow trading day. Sorry about that. We got economic calendar here. We got weekly jobless claims today. Last week we had 245,000 people applied for unemployment. Forecast for this week was 240, and it came in at 245,000 here. Last but not least, we got the Chicago PMI for the month of December, which is this manufacturing data out of Chicago. So previous reporting in November was 63.9. Forecast for December was 62, and it came in at 67.6. So manufacturing overall this month seemed to have kind of ticked up in a lot of markets here, and Chicago's no different. So obviously a good sign right there. We like to see manufacturing come back a little bit here. Headline news: stock market is currently up. It's kind of taking its cue from last week. We're getting new highs every single day, practically here for the Dow and everything else. But right now we're getting, it's light trading because the big boys are basically out on vacation. So there's light on these big hedge funds and such. They're very light, light staffed basically because most people are still on holiday. So a lot of it's being brought up on the day traders and such. So again, another day of light trading in the stock market here. Bond market, as you can see here, we had a huge rally here. I went from right above this first resistance level here, all the way up to the 25-day moving average, and just stuck right below it here. Now today we pulled back from that 25-day moving average, and we could be in a range here from this, which was our first level of resistance, could be our floor now, and then have the 25-day moving average here. Right now we're down currently about, it's been kind of wavering in the last hour here between 8 and 11 basis points, down about 8, 11 basis points. So some lenders may come in with worse pricing, mostly from the East Coast because it was even probably a little bit worse. But again, but for the most part, it may not be, you're not going to probably see a lot of price difference between yesterday and today in this. So as you can see, right now we're below this, which was a floor support. Now it's becoming a ceiling, and we dropped below that. Now we're up against it, and if we can stay below that, we could, again, kind of keep rates improvement. It will kind of give us a little bit different range here, the high end and the low end here. So if this continues to drop, the rates will get better as we go along too. So again, something to watch for this week. Again, is a light trading week, and things could quickly change next week once the traders are back in session and back at work and stuff. So, and they're going to be looking for a new catalyst. Now, probably what they're going to be looking at is trying to determine as to how much of an impact the new tax cuts will have on the economy, and especially with the Fed raising rates, and we're getting the short-term rates rising so high that we're starting to the difference between the spreads and the yields are coming down pretty closely. So if you recall, about maybe a month ago, I talked about that, and it was at that time between 60 and 69 points. At that point, it was between 60 and 69 points between the 2-year Treasury and the 10-year. Now that's down to about 53 points after the recent rate hike. So as that comes down, what happens is when you have the short-term and the long-term rates, we'll have like what they call flat yield, and then we sometimes when we go into a negative, that kind of forces us into a recession because the lenders just simply don't want to lend money out. So just something you're going to watch for. But once it starts dipping below 50, you probably start hearing it more on the mass media or the big media markets out there, as right now they're not really giving a whole lot of attention to it. But once it starts dipping below that, you'll probably hear it, and that could be another month or two playing out there. All right, so that pretty much wraps things up today. I'll keep these, again, short and sweet. But if you guys want to get more data, just come over to Twitter. I'm posting over there underneath my handle, Mike Bjork. And I hope you guys have a great rest of the day. Thanks so much for watching. I'll see you guys tomorrow. Bye-bye.